We're going to do a little myth busting in this video, and we're going to address the question, or maybe the statement of, if I pay one extra payment per year on my loan, am I going to pay my loan off in 7 years? I've heard this statement's been circulating in the mortgage world for a number of years. I've had it come up with attorneys at closing. I've had them say this to my clients. I've heard many financial experts over the years say this on TV. So we're going to take a look and see if this is true. And spoiler alert, it really depends. It really depends on a couple different factors. Number one, it depends on the rate you're paying on your mortgage. And it also depends on the term, the original term of your mortgage. And what I mean by that is, if you started out with a 20-year loan, prepaying the loan is going to have a different impact than it would on a 30-year loan. So I just want to show you an example. I've done a little cost analysis here. I want to share my screen with you, and hopefully you can see this and follow along. So just to set this up, this is a $250,000 home purchase with a 20% down payment. So we've got a loan amount here of $200,000. This is two different 30-year fixed rate scenarios. Both are 30-year fixed rates. And when we look at the monthly payments, we're looking at the principal and interest payments only. We're not getting into property taxes and homeowners insurance and escrow and all that stuff. Okay, so let's look at the things I have highlighted here. You can see on the monthly payment, the 3% loan, 30-year fixed amortization is going to give you a monthly payment of $843.21. The other one is a 5% loan, 30-year fixed rate. And you can see the impact of the rate here. Your payment goes up to $1,073.64. Okay. So let's say you wanted to pay one extra payment per year. On the 3% loan, you would take $843.21, divide that by 12, and you're going to be paying an extra $70.27 per month. Likewise, at the 5% rate, you're going to need to pay an extra $89.47 per month to pay the one extra payment per year. Well, let's look at the impact. If you go down to the line that I have highlighted here that says Freedom Point 1, that's really just telling you what is the date in the future when this loan is going to be paid off. You can see at the 3% rate with the extra payment per year, we're going to pay the loan off in 26 and a half years. Saving 3.5 years, not 7, off the end of the loan. At the 5% rate, we're going to pay the loan off in 25.33 years. Again, you're saving years off the end of the loan, but not 7 years. And we can take away from this that the impact of the prepayment, or the prepayment, has more of an impact the higher the rate is on the mortgage. Well, why is this? When you amortize a mortgage loan, part of your monthly payment is going to pay the principal off, part of it is going to pay the interest that has accrued since the last month. So at a higher rate, you're paying more in interest. So when you prepay the loan, you're cutting that principal down earlier, and you're saving your money on interest. The interest rate, because it's higher, has more of an impact on your monthly payment. So the higher the rate, the more of an impact you're going to have by prepaying the loan off early, or prepaying the loan on a monthly basis. Now, I went back just to see what kind of rate would we have to be looking at to make this a true statement. And on a 30-year fixed rate, you would have to be paying around 8% to make that a true statement. If you were paying 8%, you pay one extra payment per month, you would save about 7 years off the end of the loan. So you can see, again, it's been a long, long time since we saw 8% rates on a 30-year fixed rate. So this statement's been circulating a long time. So bottom line, prepaying your mortgage will save you money. It will save you years off the end of the loan. Probably not going to save you 7% or 7 years off the end of the loan unless your rate is really high. If you have more questions about the mortgage process, amortization, or questions about this video, please feel free to reach out to me personally, and I'll be glad to help. Okay, thanks for watching. We'll see you soon.